given the fact that we have idiotically weaponized the US dollar, made it less competitive as a medium of exchange, is we've forced them to begin to stockpile gold to utilize as a medium of exchange, one that can't be weaponized. And I would suggest to you that the whole ascent of precious metals has to do currently with the weaponization of the US dollar. The fact that the appreciation in gold has occurred at a point in time when the nominal interest rate has doubled is extraordinary.
In our latest episode, Rick Rule, a seasoned expert in commodities, shares his insights on the precious metals market, focusing particularly on gold and silver. Rule believes that the precious metals market is often driven by a fundamental sentiment, fear for gold and greed for silver. He points out that the starting point for a bull market in these metals typically comes from a lack of faith in the purchasing power of fiat currencies. With the current uncertainties surrounding the economy and the U.S. dollar's purchasing power, Rule suggests that there's a potential for significant movements in the prices of gold and silver. Hit the like button, subscribe to the channel, and check our pinned comment. Enjoy the video.
In answer to the former question, and that's consistent with prior precious metals bull markets. A precious metals bull market has been, in my experience, always kicked off by fear. The silver buyer is a greed buyer. The gold buyer is a fear buyer. And the precious metals narrative always starts with fear. Now, my belief is, and I think we've had this discussion before, but I'll try to repeat it briefly. My belief is that the hallmark of a retail precious metals bull market is a lack of faith in the maintenance of purchasing power in fiat currency denominated issues. I believe, too, that investor perceptions are set by their experience in the immediate past rather than by history. And we've been through a period, 1982 to 2022, that was very benign. Lower interest rates, relatively strong U.S. dollar, good performance in the U.S. bond market, good performance in the equities markets, punctuated by some severe but brief downturns. The consequence of that is that despite the fact that the hallmarks of the deterioration of the purchasing power of the U.S. dollar abound, people aren't afraid of them yet, just like they weren't afraid in the period 1967 to 1982. It's eerie how similar that is. You might not have been around, and much of your audience might not have been around, but I was coming of age then. We fought the war in Vietnam and lost. We fought the war on poverty and we lost. We tried to fight guns and butter simultaneously, and all we did was ruin our own balance sheet. It took 10 years of depreciating the purchasing power of the U.S. dollar over the decade of the 70s, when we lowered the nominal purchasing power of the dollar by 75%, before we were able to afford our debts. And that process caused gold to go from a price-controlled $35 an ounce to $850 an ounce. The fear is the wrong phrase, the concern, the affinity for arithmetic that investors need to exhibit around U.S. dollar denominated debt instruments hasn't matured the same way that it hadn't matured in the 1967 to 1982 hiatus. If it does, and I suspect it will, you won't think much about a nominal move in the gold price from 2,000 to 2,200. You will be looking at a much larger move. Will it occur? I don't know. But I certainly think it's a contingency worth insuring against at its worst, and a probability worth speculating in at its best. And if you see the type of move in gold that I think is warranted, because of the deterioration of the purchasing power in the U.S. dollar, particularly relative to the interest rates that are paid now, I think that the move in gold will surprise you in terms of its quantum. And I think if that momentum is established by gold, what you'll see is that partway through that bull market, where the narrative becomes broadly established, that silver will come ultimately to outperform gold.
Gold prices surged to all-time highs this week, with the price breaking out above $2,150. The 5% rally in gold now sees the precious metal trading 18% higher than where it was 1 year ago, when markets first began to panic due to the collapse of Silicon Valley Bank. This week's rally has been fueled by a number of factors, including remarks from Jerome Powell, chair of the U.S. Federal Reserve, who gave a heightened indication that interest rate cuts may be on the way in the United States. The move higher in gold has caught some traders unaware, with speculators short the gold market looking to cover positions. Now we'll show you the best clips of the latest Keith's interview, but first hit the like button, smash the subscribe button, and take advantage of our sign-up promos to start getting into crypto for free. Enjoy the video.
Market share of precious metals and precious metals related assets in the U.S. market is below 0.5%, down from a 4-decade mean of 2%. So part of this is a reversion to mean. But U.S. consumers, by and large, U.S. investors aren't buying gold. The outflow of gold from the ETFs tells me that gold doesn't have a place in the public imagination in the West. I've learned by grading 80,000 portfolios over 6 years from around the world that the gold constituency is a traditional constituency. When I talk to investors, which I do, in India, Pakistan, Indonesia, Brazil, China, even young investors, and particularly female investors, there's a very strong interest in gold. But the increase in gold price really hasn't come from that. It's come from central banks and governments objecting to the weaponization of the U.S. dollar, and understanding, too, that being paid a 4% interest rate in a currency where the true purchasing power of the currency is declining by 7%, that understand the bad arithmetic around U.S. Treasury securities, while similarly understanding that the U.S., for all its faults, is, to quote Doug Casey, the prettiest mare at the slaughterhouse. There just aren't alternatives for places. Well, the Indians don't trust us, and the Saudis don't trust us, and the Russians don't trust us, and the Indians don't trust us, and the Persians don't trust us. They still trust us more than they trust each other. And given the fact that we have idiotically weaponized the U.S. dollar, made it less competitive as a medium of exchange, by the way, the ultimate form of stupidity, what we've done, given the fact that these people mouth appreciation for each other but can't stand each other, is we've forced them to begin to stockpile gold to utilize as a medium of exchange, one that can't be weaponized. And I would suggest to you that the whole ascent of precious metals has to do currently with the weaponization of the U.S. dollar. The fact that the appreciation in gold has occurred at a point in time when the nominal interest rate has doubled is extraordinary. And it's testimony to the stupidity of the U.S. executive and the U.S. Congress.
What do you think of Rick Rule's take? Will silver rally continue, and will we make new all-time highs in 2024? Post it in the comments section down below your price prediction for gold and silver. Subscribe if you have not yet done so, and watch this video right here because you'll love it. I see you on the other side.